All right, we got
What's
some
going
animation.
on, penny boys and gals? I love that little class starting soon thing flying around the screen. I saw that, Pookie.
Thank you. Goes with the music.
Welcome to our class. We do this every Thursday, 2 p.m. Eastern. Myself and Pookie's Revenge. This is going to be a quicker one because we're actually going over some of the stuff that Pookie's went over in detail in his Rags to Riches series. You can find that on the Penny Boys Discord. But we're going to kind of quickly go over just a quick overview of what that is and what it means to manage a portfolio when it comes to having dividends in it, and just the differences between that, as opposed to just throwing money into random stocks and hoping they go up and you make money. So, Pookie, I'm going to let you
That's how I did it. No.
take it away.
Yeah. So obviously, I mean, some of the people here are more familiar, so this is more for the recording and those who can't attend right now. But these guys have seen the light now, and the purpose of us trading is to make our time and money more efficient. That's kind of the ultimate goal. That's why everyone's in the market. That's why, you hear older folks just, oh, you better start investing young, blah, blah. I'm turning into one. So, but it makes sense now. So it's not just about buying and selling stocks. It's not just about how much money you can make. It's what you plan to do with the money and making sure that that money then goes out and gets more money for you so that you're not just, building up a portfolio with a lot of speculative trades, racking up profits, surviving the IRS, and then relying on that and your ability to speculatively trade to make a living. You really need to be able to not just trade one job for another and become a slave to the market. And you need to be able to invest those profits so that they will be passively working for you like little employees. So, we can teach all the technical analysis. You can teach somebody to trade an hour, and then they'll spend a couple of years trying to figure out how to get out of their way. And that's an important concept because the couple of years that they're using to learn how to spend or how to get out of their own way, they can spend more effectively by starting the passive growth. So ignore the fact that I have Uber up really quick, and I'm actually going to drag over my spreadsheet. Duck kind of surprised me on this one. All right, so basically the idea of any portfolio growth, and I apologize if there's some background noise here. My washer's
it's
going crazy.
Been on the schedule for the past week, Pookie.
Yeah, well,
surprise. We have a schedule.
Don't like these last minute surprises. So one of the best things we can do for ourselves as investors, traders, whatever, even if you are just treating this like a casino account, right, is to make consistent contributions. And you can see here on this particular one, I'm doing $500 a month. It really doesn't need to be that much. If you can only swing $20 a month, that still adds up. And the goal is not to look at 1 month or 2 months or 3 months, which is what most traders end up doing, but to really look at the long-term plan, right? So 5 years, 10 years, 20 years, 30 years from now, what do you want to do other than look back that same amount of time and wish you started sooner? So we can start that today. We can start by putting, $50 in a portfolio every month or $10 a week, whatever it is. The important part is that you just keep contributing, and then that you have a plan to keep the majority of those contributions away from speculative risk, because that's where people lose their money. And if you put $500 in this month and then you lose it, you start next month back at square one with $0. Then you have to contribute another 500 or whatever your amount is, and then hope you make it that time. And if you don't, you're starting back at $0. And it just becomes a cycle. And as you realize profits along the way, you still have to pay taxes on those, even if you don't keep those profits. So the goal isn't to take your profits and turn them into more profits and more profits and more profits. The goal is to take the majority of your profits and the majority of your contributions and put them into slower term passive income, where you're not selling over and over and over again, whether it's for profit or loss. Every time you sell, there's a direct tax impact, whether it's a advantage that you can get back at the end of the year or a burden that you have to pay at the end of the year. So if you're making consistent contributions and you're using about 70 to 80% of that to just buy shares, you're not selling anything. So there's no real tax burden because you're not realizing any profits or losses. You're just racking up shares and dividends, assuming they have a dividend payout. You don't necessarily have to get into the dividend side of it. You can always just buy long-term growth stocks that have companies that have strong historical financial growth, good revenue, good year over year. We talk about the 10-year CAGR, compound annual growth rate. There's a couple different areas where you can apply that. And this is probably the most boring part. It's just looking into those companies and figuring out which ones are undervalued, which ones have good dividends. But once it clicks and you realize that this is the way that you make good money over time, it becomes very exciting. So, if you're adding $100 to a portfolio once a month, that is automatically saving you $1,200 per year. Okay, so that, if you just save that and you don't collect any interest on it, you don't get any dividends, blah, 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 that's $1,200 that you're not risking to the market. So most people in America don't have $1,000 saved up. And that is depressing, but it is just the way we are, right? And that's why you have to start small. Just start with what you can. Contribute as consistently as you can, and don't let your impulses and your desire to make money get in the way and cause you to lose money, especially while you're new. If you're struggling or trying to figure out how to trade, you're going to make mistakes. It's going to happen. You're going to make impulsive choices. You're going to pay the market a little bit too much to learn the same lessons you would if you were practicing. And to avoid all that, what we can do is take the amount that you contribute and we can break it up. Right. And let me just pull up a spreadsheet here because it makes it easier to kind of visualize it in 1 second, because this program takes a little bit to load. I have too many flowcharts. Basically, the idea is you want to split your contributions up if you want to sort of trading at all. If you don't, that's okay too. You don't have to. You can put 100% of it into passive growth, and you can still make money over time, and you're not realizing any losses or profits, so your taxes get a lot easier. So in this case, if I'm contributing $500 a month, every month, that means September I put $500 in, October I put $500 in plus a little bit extra. We had some extra proceeds, but I just wanted to use that to demonstrate that those do make an impact long term as well, but I didn't want to rely on those to grow the account. If I took 70% of that and I put it into investments and specifically dividends, that's automatically 70% that I don't have to try to trade SPY with, or to try to trade Tesla or Nvidia, or try my luck in SPX or anything like that. It's just, I'm getting dividend payouts. I'm acquiring shares. I don't really care too much about what the price action does. If it goes down, I can get discounts. If it goes up, I can always scale out if I want to, but I'm pretty intent on holding these for more than a year. So I don't really care too much about what the market's doing. I just care about those dividends. Or if I don't want to invest anything in speculative trades, I can also just let that cash sit there, and my broker might give me an interest payout because they want to use your money too. So if you just let your money sit in there, I think like Robinhood and Webull are 4 to 5%, which automatically gives you profits. It's not a huge amount, but it's over the course of a year. That's 5%. That's pretty good for not doing anything. Just having a savings account. It's better than my bank is. So that's an option too. You don't have to trade at all. You don't even have to get into the dividends or investments or growth, anything. And then with this 30 remaining percent, if I want to, I can practice with that. I can do speculative trades. I can try to trade some options. I can buy shares. I can sell shares. I can try to scalp. I can do whatever the hell I want with that 30%, but I don't have to. And that takes a lot of the pressure off, because I know that this isn't the only way that I'm going to make money in this portfolio. Okay, the money's going to come to me no matter what. So I don't have to put all this pressure on myself and say, if I don't do this, I'm not going to grow. Because you will. It'll just take a little bit longer. But, a lot of people say, oh, it's too long, it's too slow, it's too minimal profits, blah, 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 blah. But those same people are also losing thousands and thousands and thousands of dollars that could have just as easily gone into investments and dividends because they're trying their luck in SPY and SPX because they haven't quite found that stability. They don't necessarily know how to manage the risk just yet. And they're just taking the money, they're throwing it into SPY or whatever it is. They're taking a loss, and then they're immediately re-entering. Okay. So if you take a loss and you don't re-enter, you're not exposed to the wash sale rule for most individuals. And again, there's a disclaimer time. I can't give tax advice, so make sure you ask a locally licensed tax professional. But I do know that the wash sale rule applies to U.S. investments. And that means that if you re-enter a position after realizing a loss within a 30-day window, you can't claim that on your taxes. It's a wash sale. So if you don't do that for every single trade, at the end of the year, you get a nice little deduction off of your capital gains burden, as well as your salary and income. So it's pretty nice. So don't take losses for granted, especially in those first few years, because you literally get those back, and then they come off of your tax burden, which directly increases your refund. So you get those same dollars back, and then they can go right back in 70% of them can go into dividends, and 30% of that can go into the speculative stuff if you want to. So you're just taking the same dollars and you're just putting them into the market over and over and over again until they become winners, right? Because if it becomes a loss again and you don't re-enter, you just get them back at tax time next year. So you're just doing this over and over and over again until they become winners. And once they become winners, you're taking those profits and putting them into dividends and long-term investments. And then they just passively grow. So it's an ugly cycle of just waiting, but it's a lot less ugly than trying to trade SPY and not having anything really figured out and not being able to find that consistency and hurting yourself over and over and over again because you can't quite break that cycle. And what we do here is if we are taking our contributions and we're immediately taking the majority of them and setting them aside so that they're wrapped up in investments, we don't have to worry about whether or not we're tempted to use that money because it's there. It's already locked in. It's a share that you've bought. So it takes a lot of the pressure out of the mix. So within the speculative amount, if I wanted to, say I'm using 30% of $500 each month, that's $150. If you're on a cash account, you might want to split that into thirds so that you constantly have settled cash rotated. And then from there, you really want to base those positions on the type of trade you're doing. So for in this specific example, okay, let's just kick up here to month 2. All right, so we're in October right now. The total contributions were $1,200 so far in the account. So I think I'm up at like $1,280 or something right now. $840 are in investments, so I'm not touching those. So I guarantee myself that at November 1st, in a couple of weeks, I'm going to start that month with at least $840 in my portfolio no matter what. Obviously, the share prices are going to go up and down, but I don't really care, right? Because I'm not going to sell them. I also know that as long as I don't blow up my speculative portion, I'm going to have about $360 to do speculative trades for this month, which means if I cut that into thirds, it's $120 a day. And if I want to do 5 trades a day, that's $24 per trade. So I can extrapolate all that just using that simple formula and know exactly what position sizes I'm going to be using for day trades or for options or for anything over the next 5 years. Okay. So that takes a lot of the stress out of the mix too, a lot of the uncertainty, because I have a very specific formula. So if I'm here, for example, April of 2027, my day trade sizes will be 1/5 of this $2,220. And that's just from contributions and not necessarily trying to grow the portfolio with speculative trades. And it also doesn't include the dividends. So by the time you get here, when you've got 6,660, I didn't pick that on purpose, but if you've got this amount to speculate with, and then you've got this much wrapped up in investments and dividends, and you're doing like the wheel strategy, covered calls against shares you own, and blah, blah, blah. There's all kinds of ways you can make that passive income. That is awesome, right? Because this means that I get to use every day. In 4 years, I'll be able to use $2,220 per day for day trades. Okay. And I'm still going to have about $15,500 racked up in dividends underneath what I'm going to add on this entire time through speculation and dividend reinvestment and stuff. So that's if I want to reinvest or if I want to speculate. Okay. If I don't want to speculate, there's all kinds of other options you can take as well. If I don't want to use, 30% of my portfolio, my contributions, and then use 1/3 of that per day, I can always just roll X dividends. I could just buy stocks before they hit their X dividend date, make sure my name is in their little book on the record date, sell those immediately, get the dividend payout, and then I can take either the loss or the profit on the shares, and I can use that either to reinvest into dividends as a cash profit that I can just scoop up here, or if it's a loss, I know that I just don't re-enter that for another 30 days, and I get that difference back in my taxes. So that's without looking at any charts. That's just looking at dividend stuff and just having a plan. Okay. So if you are struggling or you can't figure out how to trade or you don't know how to analyze charts or maybe it's too overwhelming or you're too busy, you can just make money with dividends and it's pretty easy. You just have to know what kind of moves you have available and how to make them. So I don't want to see anyone getting hurt anymore trading 90% of their portfolio in NVIDIA. It's just not worth it. Now I have beeping in the background.
I was like, what's going on? Is your hot pocket ready?
No, it's laundry.
Oh.
I wish it was a hot pocket. Yeah. So, does anyone have any questions about that stuff so far? Does anyone know? Does anyone have any? Are you curious about where to start, or does this all make sense? I know I kind of ran through it pretty quick, but this is kind of a summary of a series.
Yeah, and for those who don't know already, you can find, I'm actually going to put them all in the Discord right now. That's where you can find all the episodes.
Snowflake. That's a good question, Snowflake. You probably meant it as a joke, but dividend is an incentive that a company pays you to own their shares. So when you buy a stock, a company takes a portion of their profits for the year and they set them aside to give to shareholders. And then, yeah, you get that no matter what. It's like when you sell a contract, you get paid that premium. You keep that no matter what happens to the shares. And yeah, I kind of figured you were doing it just so others could learn.
Yeah, it's definitely a lot easier for the companies to offer incentives as like money, like, hey, you hold on to the shares, we'll give you money, as opposed to having to be like, hey, you sell our shares, we're going to break your kneecaps. So dividends are a way,
Right.
are a way to incentivize holders to hold on to the money, or hold on to the shares.
Yeah, and the small cap companies, they start with your thumbs.
Pinky first.
Yeah, and dividends aren't always cash. We're going to lead into that pretty far into the series, but the dividends can also be shares. They can give you different kinds of shares. Now, that's a lot of people know about common shares, but preferred shares prioritize dividend payouts as well. So there's different kinds of shares you can buy when you get a little bit more, a little bit deeper into the dividend realm and the investment realm. You're going to realize that there's all kinds of stuff you can do, like the convertible notes, for example. Those can be a very powerful instrument if you can use them right. You can use bonds, futures contracts, commodities, all that good stuff. You can trade pretty much anything you want. You just have to understand the processes. So the Chag, still wondering where to start. Okay, well, that's easy. The first place you can start is opening a brokerage account. You're going to need that because a broker is someone who trades shares for cash on your behalf because you can't do it directly. They all deal with other brokers and stuff. And then just making these consistent contributions. A lot of brokers offer cash just for having cash. So that's where you can start. And then if you're looking for specific dividend stocks, or if you're having trouble with the math here, we can do that too. The choice of account type will also make a difference. Yeah. So if you want to, we'll just walk through them all one at a time. So 401k and other types of retirement accounts like IRAs, Roth IRAs, they have different tax implications. So some handle contribution taxes differently. Some handle withdrawal taxes differently. I can't really give you specifics because I don't know your individual circumstances, but you can always communicate with your broker and yeah, you get it. They'll give you more information than I can. If you're on a cash account, that means that when you sell something, you have to wait. Usually it's T plus 2 days for shares for that cash to settle before it becomes yours again. If you sell something that you've bought with unsettled funds, then you get a good faith violation, or if you sell it before the funds settle. So it's always best just to wait for those funds to settle before you buy with them again. That way you don't run into a situation where you're kind of forced to do that. And that's why we rotate that 33% on cash accounts. So this box right here. So if I put in $500, I take 30% of that, which is $150. I'm going to punch this washer in the face. And then if we take a third of that and it takes 2 days for the funds to settle, on that third day, we'll have those funds ready again, no matter what. So we always have kind of that wheel of settled cash. Now on a margin account, you don't have that. You have instant fund settling, but you do have the pattern day trade rule until you get over $25,000. And the pattern day trade rule just means that if you have a round trip change in ownership of a security within a trading day, that counts as a day trade, and you're allowed 3 of those across a 5-day rolling period. So if you buy and sell a stock on Monday, you have to wait for the next Monday, barring any holidays, before you get that slot back. And if you occupy all 3 of those day trade slots at any given time, and then you do a 4th day trade, you become labeled as a pattern day trader, and you got some account restrictions heading your way. That's for a margin account. Give me 1 second, guys. I'll be right back. Duck, you take over here, buddy.
The beeping. I was like, is he started like throwing stuff at her or something? Like try to hit that off button with the mouse or something. Just really quick. I know that Pookie, is talking about people who can't trace, who might not be comfortable with the charts or have the time and all that kind of good stuff. We are going to actually be talking about a whole bunch of different charting strategies and just charting in general. With coming up at 5 p.m. Eastern is going to be our first class of 8 of our charting masterclass with our charting expert BTCJ. Hopefully by the end of these 8 weeks, you won't have that issue anymore where you don't feel comfortable in the market and making these kind of trades, and you'll actually feel comfortable. You'll be obviously you will feel comfortable, making trades, using the charts, putting out all your own lines and all the drawings that you like. You see Pookie that he loves to put on the charts. You'll be just as comfortable doing that as well. Hopefully by the end of these 8 weeks, you can start getting those gains, compounding them, getting gains, and putting them into some dividends and safer plays. That's obviously that's a huge step. If you're not able to make money, at all with if all you're doing is a dividends, it's going to be a slow build, which is fine for some people. Some people are just here to invest. But of course, the step 2 is of course being able to go out in the market and actually make that money to add to that account, and then maybe even step 3 is put into real estate. Who knows?
Yeah, it's ultimately it's just about not losing your money, right? So if you're new, you're struggling, blah, 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 you prioritize saving first and then passive growth, right, on top of saving. And then you can prioritize speeding that process up. And that's where we get into the trading and the speculative trades and stuff like that. And if you guys really, really, really just want a crash course, watch how simple this is. So I say simple, but it's not easy. So if you go to the daily chart, pretty much on anything, I'm just going to erase all these. All right. Watch how simple this can be. You plot a line when you see the price turn around, okay? There's 2 lines right there. I'll draw a third and a fourth, okay? I don't have to care about what any of this stuff does until it gets down to this line right here, okay? So I can just set an alarm, like great alert right here. Price below that level. I could put this stock on a watch list, right? Where's it? Add to watch list. Oh, I already have it on here. And then I'm done. I'm hands off, right? And then when it comes down here, all I have to do is look for something like a small engulfing candle or whatever I want, right? Whatever my preferred strategy is, as long as the risk is super tiny, that's all I care about, okay? I don't need to do anything super complex if I don't want to. The specifics of all these trading strategies don't really matter other than how they help you identify things, and more specifically, how they help you identify the risk, and then how you can trade it with confidence and not hurt yourself by compromising and letting something drop below this level. Actually, let me move this up here because I do really like this one. So if I see the price come down here below 315, for example, and I know I've got a strong support level here at 311, it makes sense that I really only want to look right here in this area, right? And you just do this over and over and over again. And if you pick 5 stocks, 10 stocks, and you add them all to a watch list, and you just do something simple like that, I don't care if the price is here, irrelevant, right? I don't care if it's up here, it's irrelevant. If it's up here, it's irrelevant. If it's down here, it's irrelevant. I only care about what happens in this little box right here. So I don't need to try to trade this until the price gets to this box. And this is where simple is not always easy, because this is very, very simple. You're just drawing a couple levels. You're looking for minimal risk and maximum reward, and you're trading it appropriately. And I could teach you that in 5 minutes to an hour. And we can teach, how to break up your positions and scale in and scale out and all that good stuff. But it will take you years to figure out how to do it the right way, because we can't get past our own psychology on our own. And it's human nature. It takes time. And that's really what it boils down to. So while you're figuring that out, while you're trying to study yourself and identify those obstacles and work around them rather than trying to push through them, that's why we got to focus on saving money. You focus on saving first, and then you take a small piece of what you're saving, and then you can try to put it into stuff like this to get that practice down, okay? And as you're making these consistent contributions and things are growing in the background and you're buying dividend shares or whatever your particular approach is for passive income, that's just growing. It's passive. You don't have to do any work for that. You're just looking at a couple dividend stocks or whatever your approach is if you're doing the wheel, for example. And you're only taking 30% of what you have and trying to figure this stuff out. That 30% becomes very, very efficient, and then you don't really need to use more than that ever. And it doesn't have to be 30%. You can use an 80-20 split. You can do a 90-10 split. If you're someone who's putting in a little bit more per month, I would put 90% in passive income and 10% to trade on, just to keep yourself small while you're taking those hits. And then, it's going to take years for you guys to figure this stuff out, even though it's very, very simple. You can literally just, there's a million different strategies here. You can use, is the RSI over 50? And do I have a candle over the moving average? Yes, absolutely. That shows bullish strength. Boom, boom, boom. Easy trade as long as the risk is small. Just do that over and over and over again, and you'll make some profits. You take those profits, you put them into your investments long term, and you keep those investment sizes consistent for the speculative trades. Say you turn $120 into $150, right? Here's the original 120. Here's the profit that's sitting on top of that. I'm going to take that, put it right back into my investments, and this can stay in the speculative section. That's all you have to do. And if you start with $120 and it gets bumped down to $90, you just use that $90. You don't pull that money back from your investments and put it over here just to round up that 120. You simply trade on what you can. And if you run out, you stop trading, and that's where people hurt themselves, because they try to downsize their passive income positions and try to ramp up the speculative amount because they think they're losing. But remember, next month, I know for a fact I'm going to have at least $840 in this portfolio at the start of the month. And I'm going to deposit $350 into it just for investments. And that will bring my investment amount up to $1,119, as opposed to me taking $300 of this, putting it over in the speculative amount so I can trade more, and then bringing this down to $890. So this is separate from this. And that's where people tend to have the most struggle, is they need to trade. They need to speculate. And there's definitely a time and a place for it. And you will definitely get there if you put in the work. But understanding what the work is and putting specifics in place to protect yourself while you're learning what the work is, that's every trader's journey. And that's what hurts a lot of people. Snowflake, you're trading with $200 daily on a $1,000 plus account. So you got like a 20% mix for your speculative trades. Now you're doing options, so they settle every day, so you get that money back immediately. For the next trading session, not immediately. But you also know that you're limiting your risk by having only $200 in at any time for that kind of risk. And then I know for a fact you're taking all your profits and putting them into forward, because that lets you buy more dividends, which gets you more shares, which gets you more dividends, which gets you more shares, and just it compounds nicely. It's beautiful. So while you're studying, while you're learning, while you're new, focus on learning this stuff, which you can learn in 5 minutes to an hour. It's really not that hard to learn, because everybody kind of knows what they should do. You guys pick up on things really quick. I'm proud. I'm not trying to belittle anyone here, especially like the PBU, because there are still a lot of things that you do need to learn over time. But if I were to just give someone a crash course, this is exactly what I would tell them. Be like, plot your levels. Don't even look at it till it's down here, and then see if you get a direction that way. If that's the case, you can trade that. Otherwise, you don't have to trade anything, right? Because you've got those passive profits just racking up. He's nice. It's very nice. Now, if you're in the race here and you're trying to build out dividends, and yeah, absolutely, that strategy isn't for everyone. That's just a very simple way to identify things. That's why we teach you guys all this stuff, so you can identify where it works for you, and then you can use it with confidence. Because remember, none of the specifics really matter. It's just what you like to trade and what you can identify.
Yeah, like I know Shag was saying, it sounds a little confused. I just want to make sure that everyone knows, like, just because this works for Pookies and might work for Snowflake and Masters, it's a really good strategy. It's a really good plan. I'm talking about your dividend, the rags to riches one that you're doing.
Oh yeah,
it's a really good plan, but just it might not work for you, and it's not because you're a bad trader, like you hate me, you don't get it, or it's just because it just might not work for you. I know for a fact that Pookie's trades this way, but I know that Jay doesn't, and I know that Austin doesn't, and I know that they trade differently than each other. I know that all of our ex-shot callers, they all definitely traded differently than Pookie's or Jay or Ethan. Like, everyone is different, so it is really important to realize that, if this is not making sense to you, then maybe it's just, either A, you can put a little more time into doing the videos, asking Pookie some questions, or B, this is not for you, which is totally fine. Like, there's nothing wrong with having a strategy that works for somebody and doesn't work for you. So that is something to really keep in mind.
Absolutely. And that applies to everything, right?
Yeah.
Like, some people might just not want to deal with dividends. And
Yeah.
that's okay.
I mean, this strategy does take time. Yeah, it sounds, easy, simple, but it definitely does take time. It takes effort. And so, like, if that's not where you want to put your time and effort, you don't have to.
Well, that's what it boils down to, is you don't need to trade options. You don't need to trade
Right.
SPY. You don't need to trade equities if you don't want to. You don't even have to look at a chart to make money if you don't want to. The goal is to get the pressure off of you and to get the stress out of the equation from understanding that you don't necessarily need to follow one specific route in order to make money. You don't need to force something to work. And that's why we're teaching this stuff too. It's not just, technical analysis. It's not just buying and selling shares. There's other ways you can make money. You don't have to trade speculation. You don't have to trade options. There's a lot of people that don't trade options, although it's a very good way to make money if you can manage your risk and blah, 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 blah. You could say the same thing about trading shares or futures or crypto.
I know people who only trade crypto, and they make just as much, if not more, money than people who are doing, dividends or options or whatever. It's really, and I know people who are trading crypto who are making a lot less than. So it's really dependent on the person and what works for you, because every single strategy does involve different, or it's different. It involves different emotions to really have it work out. Different schedules, different mindsets. A crypto trader, they need to have a different mindset than someone who's trading dividends, because there's a lot more volatility, a lot more news, a lot more going on in crypto than there is in dividend stocks. So it's really dependent on what you want to do, because once again, it's about making it fun. There's a lot of jobs out there. Yeah, I mean, there's a lot of jobs out there in the world that make the same amount of money, but it just doesn't mean that one is one is good for you, or the other isn't good for you. It's really what makes you happy. The whole goal here is to get away from that 9-to-5 mentality and start having that financial freedom. But it's not just financial freedom; it's also just freedom of just self, being happy. And obviously money doesn't buy happiness, but it sure doesn't hurt.
Right. Well, it buys other people's happiness too. Like the cardiology clinic that I used to work at, they were corrupt as hell. Like, they were literally just hurting and killing people through negligence and stuff like that. And you got to understand that not everyone there has the ability to just leave their job. I was there because I wanted to be. I liked the job. I liked what it was doing. But I didn't feel like I was stuck. I didn't feel like everyone else, because I had that option to just leave if I wanted to. So I turned them in. I was like, no, you guys are killing people, so stop it. Now, everyone else that worked there couldn't do that because they needed the job. And it doesn't necessarily mean they're all going to lose their job from, getting shut down and stuff like that. But it means that the people who were doing things they shouldn't have been doing were held accountable. And more importantly, it wasn't someone who maybe was a single mom and had 2 kids and they were trying to survive that had to be put in that position to do that. So I had the choice to do it. I had the ability to do it. I had that freedom. And that's kind of what I was after. And I did it because I could. Like, it's not just about making sure your rent is covered or making sure you have a big number in your bank account. You got to be able to find purpose in life and to do the right thing. So obviously some people are just trading so they can get some gas money, and that's okay too. That's everything that you make, you're offsetting something else. And that's the entire point behind the Rags to Riches series, is teaching you guys how to reframe things. And if you can reframe things into a realistic way, it takes a lot of the uncertainty out of your future. So like Snowflake, for example, if he's buying shares of Ford, and that's getting dividends and everything is racking up it's nicely and all that good stuff, he is at a defined point where he can identify, if he's making $20 a month in dividends, right? And he just stops reinvesting those. That is basically going to work for the stock market for a very short period of time. And then they will pay for your Netflix, right? So you're just offsetting it. Maybe if you got $50 a month for your dividends or something like that, or you get just passive income grows, right? It becomes really tangible numbers. Even just saving $100 a month gives you $1,200 at the end of the year. How many months worth of rent or how many dollars do you think comes off of every dollar's worth of rent if you put that into dividends or passive growth or some sort of speculative trade, if you're profitable at that, or just knowing how to leverage your taxes, Everything offsets. You're getting free internet, free phone, free rent, free groceries, free gas in your car. Covers your medical expenses if you have that growth over time. And once you start to turn that into realistic things, like when Snowflake is looking to take profits and trying to fight the urge to hold, as soon as he sees that he has enough for another share of Ford in his P&L, he just locks it in, and then he uses that money and goes buys another share of Ford, because he knows that that's where you get the dividends, and then the dividends offset expenses or whatever it is. Again, it doesn't have to be dividends. If you're somebody who likes to, you want to go open a hot dog stand, right? You're going to go buy buns, you're going to go buy hot dogs, you're going to go get a permit and all that stuff. You're going to invest, right? You're going to put in a little bit of time. You're going to cook hot dogs, and then you might get a 6 times return on what you've invested. And then you're not just going to go buy the same number of hot dogs and the same number of buns and get another permit and stuff like mustard. You're going to take that money that you put on top of your investment, your profits, and you're going to put them somewhere else. You're going to pay off your rent. You're going to buy yourself food. And then that money is money that you don't need coming from somewhere else. And then if that money makes you more money, which is all we're doing here, those offset and it compounds exponentially. And that's kind of the underlying mechanism here. They said, compound growth is the 8th wonder of the world. And that's all we're doing. We're just exploiting the hell out of that. So if you're losing, whatever you're trying to do isn't working and you just keep running into that wall, look and see what your options are. First identify why you're not being able to find success at that. And then just determine if it's something you can control or not. If it's something you can't control, you've got other options. It doesn't just have to be, trying to trade the alerts or just trying to trade SPY or just trying to trade in general. If you want to go buy hot dogs and buns, you can do that too. But just know that the passive growth, the dividend side of things, covered calls, all that good stuff, that's all still there for you no matter what you're doing. It just takes a little bit of time and those contributions if that's your approach. So all we're doing is making a plan.
Yeah.
That's all.
Yeah, like Pookie said, just find the plan that works for you. You might, when you're kids, when you were a kid, you have all these different options for sports, and you want your kid to be a really good baseball player because you love baseball, but maybe your kid just isn't good at baseball. Trying to force it is not going to be good for anybody. Maybe you're really good at soccer naturally. So same deal goes with trading. Some people might see options trading on YouTube. They might have that. That itch for it. They see all the profits. I'm going to be an options trader because this guy's making a lot of money. My friend told me to be an options trader. I hear about it in the news. Options trading is the way to be, way to go. And because this kind of goes off what we were talking about last night with the psychology. But maybe options trading is just not for you. That's like someone, it's like the same deal. Someone trying to force baseball on somebody, or soccer, or football. Whatever sport it may be. You got to find what works for you.
Yeah, that's all it is. You identify your path. NVOS. Which time frame? What are you looking at? But yeah, what Duck was saying, that's all we're doing. You can plug and play all the specifics and the parameters and stuff, but it's the overall structure that we're looking for. If you have a plan for your profits, no matter where they come from, whether it's you going to work and making money, earning an income, or if it's you reselling stuff on the internet or at Target, or if it's you ripping off Goodwill and just ripping tags off and getting that receipt for your charitable contributions on your taxes, or if it's, selling drugs, or, any number of sources of compensation that you're providing for your efforts. If you just waste those, you're going to have a very hard time finding comfort in your finances. And that doesn't mean that you're not making enough or that you have to go without in order to survive or to grow out of it. You just need to really develop a plan that involves some sort of growth at some point, somehow. And if you're struggling with that,
keep going.
No, I'm done. I don't want to.
No, I was going to say, it doesn't have to be stock trading. That's the whole point of week 5 of PBU is that, we understand that, the goal here is Snowflake said is, their goal is to, I'm going to scroll, just actually read it word for word. I want the freedom, security, the money will provide me the rest of the life. And that's, that's 100% what it is. We're here to, make money so that we could have that freedom, have that security. And it doesn't matter how we do that necessarily. It doesn't have to be in the stock market. It can be, you could be your short-term profits could be buying, like, Pookie's like buying a bunch of freaking like wildflowers, for $200, and then making TikToks about them and selling them for, and getting like 10 extra profit. Like, I actually know someone on TikTok who did just that, a buddy of mine.
Pine cones.
Pine cones is another one a lot of people do. Yeah, this guy got like wildflowers or whatever, just like got like a bunch of them, and then ended up just selling them individually. And that would, and then what you could do is then you could put all that money, those profits, into your dividend. Like, you don't have to have it all be coming from the same market. Your long term, your short term. You can diversify. You can have a side hustle. And that side hustle could either be your long term investment. You're trading options and putting that into that long term investment side hustle, or vice versa, where your side hustle is a short term investment and you're putting that money into a long term dividend portfolio. It is really important to realize that it's not just about stocks when it comes to financial freedom. That's why PBU, we had that week 5 now.
Yeah, and like I said, it's all about just knowing what opportunities you have and knowing like what kind of plays you can make. If somebody, like, it is entirely possible to make millions of dollars in the finance world without looking at a single chart, and that is disgusting. Because if you're somebody who has good credit, for example, or if you get the right bank, right, you can take out a life insurance policy on yourself. You can use that as collateralized debt to take out a loan, and obviously the payout from you dying pays off the loan and all that good stuff. And then you can invest that into passive growth, whether it's real estate, which is kind of risky if you don't know what you're doing, or like the dividend stuff. And then as long as that covers the premium, you don't really have to pay anything on that loan, as long as you're just making sure the premium is covered by the payouts, and you can reinvest those because your dividends are just going to grow at that point. And again, it doesn't have to be dividends. There's a lot of different vehicles you can use to achieve the same thing, but just the fact that you can do that without even, without looking at a single chart is kind of obnoxious. And it's just knowing how to do it or knowing that you could do it that makes it insane, right? If I'm, if like I was Warren Buffett, right? He lost everything. Let's just say he started from square one. What do you guys think would be the first thing he would do? He'd write a book.
He'd throw all his money into Bitcoin. Warren Buffett loves his Bitcoin.
Yeah, he's insane. But he wouldn't have any money. He would have to start fresh. So the first thing he would do is use what he had. He'd have his reputation. He'd have his name. He'd write a book. And he'd probably do that same exact thing with the life insurance policies because that's a well-known vehicle to make money. It's called buy, borrow, die. And it's very generational. So if he lost everything today and had to start fresh and he didn't have any of his assets, I guarantee the first thing he'd do is go out and get some sort of system going to make himself money.
Yeah,
and that it would be compounding.
That's what makes the entrepreneur somebody who wants to stop consuming and start making the products that other people will consume for money.
Yeah, and when you start a company, you don't stay at that company for 40 years. You build it up, you sell it, you take your profits, and you put them into the next thing.
Right, maybe keep 5%.
Yeah. That's all we're doing here in the stock market. We're just taking some money that we've made or we're given, right? Because we all went out and worked for our hard-earned money, and we're just giving it to the market in a specific way where we're either going to get a cash profit that we can use elsewhere and continue to grow, or we're going to get a tax advantage that we can write off against our expenses or our tax burdens at the end of the year. But just knowing how to manage your money and manage your profits, really, and your debts
and your time. Honestly, that's a big part, is where you're putting your time into. If you're putting 80% of your trading, investing time into something that's not working for you, and you're only putting 20% in something that is, maybe you could, and you should readjust that. It's not trading is a lot more than just the ups and downs. The green and red candles and the company ratios. Like, the majority of it is just learning who you are as a trader / investor / just whatever it is you want to start doing. Like we said, it doesn't have to be stocks; it can be anything. I personally am going to be getting into commodity trading a little bit here once I get some time. But I think, like I said, there's just so many different options out there. One, of course, is affiliate marketing. I know that Pookie's built that Stocks Buddy indicator.
Hell of a segue.
Yeah. Well, no, I mean, yeah, Pookie did buy. He didn't buy. He made that Stocks Buddy indicator. And, if you do want a side hustle, one way is just go on TikTok and make TikToks about it. I'm actually, on my spare time in the weekends, I've been making a little course, because I've been telling Austin for years that we need this, but he doesn't want. He was too focused on other things. So I'm just doing it on my own now. I'm making a course on how to do all that, like how to make content, because I've been doing this for 3 years. I didn't even own a laptop before I started doing this. I'm basically going to be making a course on how to go from not owning a laptop and not knowing what TikTok is. I call it TikTok. I had no idea what this. I refused to go on it for like the longest time, and now here I am. I got like freaking 2 million views on TikTok. I got a couple, a lot of videos over 1 million. I have offers, for like people offer money like $200, $300 on TikTok. Like you can I'm not taking them because a lot of them are financial entities that I'm not allowed to be working with, obviously. But my point being is that you don't do, that's not for all of you listening. That's not the case. You could go and do what I did and start making probably more money than I'm currently making, honestly, doing affiliate marketing and all that kind of stuff. So I'm making a course on that for y'all, because like I said, it's not just the stock markets. The goal here is to help y'all make money. Doesn't matter how.
Well, let me ask you a question. Are you filing under an LLC when you do your taxes?
Oh, I don't do taxes, Pookie. I'm doing the Donald Trump method.
Oh boy. All right. So when you do, that laptop that you bought, subscription services, expenses related to brand content generation, things like that, those are all potential tax deductions, and you can get a lot of that money back. They say it takes money to make money. Really, it does, but it doesn't have to take a lot. It's just how efficient you are. Jay doesn't do taxes.
We don't do taxes.
Yeah. But also another layer on top of that is that computer. If you buy that laptop, sometimes you'll have several years worth of depreciation so that you can just kind of reusing that on your taxes at a diminished rate, obviously. But just understand the rules of the game you're playing, and you'll be all right.
I mean, that's the case with this. I think that's the case with everything. Especially trading. Is a lot of it's just knowing the rules. A lot of traders get burned because they don't. Either A, don't know the the day trading rule, the pattern. That's the first one. A lot of people get burned.
Oh yeah.
I personally, when I first started trading, I got my Chase account, my investment account, shut down because of the pattern day trading rules. I didn't know the rules.
Yep.
Imagine trying to go play baseball in like major leagues and not even knowing how like the infield flywheel works, or like that people can tag up after a pop fly or whatever it may be. Like without knowing the rules, you're not going to do so hot in the game, even if you have all the skills in the world.
You're charging the mound with a baseball bat.
You're gonna be charging the mound with a baseball bat, swinging wildly. Yep. I still couldn't. That was so funny. Yeah, you don't start playing baseball and just go right up to the mound and start swinging. It's like, no, that sounds more like MMA.
I want to get close to the pitch. But yeah, just if the more you learn and the more rules that you find out about like that, especially if you're running into them the hard way, you're going to realize how wasteful the learning journey can be. And that's why it's important to have a resource like this, because if you didn't know, for example, about the wash sale rule or the indefinite carry forward on your Schedule D for realized losses and things like that, and you just kept re-entering and you racked up, again, $6,000 in profits, $5,000 in losses, and you can't use a single dollar of those losses to offset that $6,000 in profits because you didn't know about the wash sale rule, that cost you $5,000. Just not knowing that.
Oh God, Jay just DM'd me. I want to share it so bad, but I don't want to put him on blast. Can I share that, Jay? I'm not going to share the whole picture, obviously. Just yes, okay. No, so Jay messages me. He goes, "Dude, you're such a Chad. I don't do taxes. Fucking legend." And I love the differences in styles between like some of the people here. Like Jay, all he does is look at charts. He doesn't care about taxes. And then we got someone like Pookie's, who was all about like the wash sale rule and this, that, whatever, and all these different strategies, and everything there is in the market. Whereas all that Jay cares about is charting, and both of y'all making really good amounts of money. I've seen Jay's profits. I've seen your accounts on Facebook. Like it's funny. Only rebates. I own nothing. It's like, yeah, if you don't have anything, they can't take anything from you.
Dude, you can just go be a couponer right now.
Like that's it. I mean, there are a lot of ways to to work the system. Whether it's playing by the rules or doing the complete opposite. Or knowing the rules enough to play by
get around them.
Any way that you can get around them. Yeah.
Well, think about it. Like that's all couponers do, right? They understand the rules very well, and they use them to leverage rules against rules. So if you can walk into a store with a handful of coupons and walk out with 432 tubes of toothpaste and the $60 in cash, that's good.
That's awesome.
That's awesome. Yeah.
That's a skill. That's a skill
and
set
then
right there.
You could take that toothpaste and you can go donate it and get that as a tax deduction and all that good stuff. Like there's all kinds of stuff you can do.
You can use it to spray in people's eyes and rob them, make a lot of money.
That's true. Yeah. Now that's, I mean, you got to spend that cash fast because you get caught with it.
Your toothpaste robbery cash.
That's right. Yeah, I mean, like just knowing that stuff, like knowing enough to put the toothpaste over the camera, the ATM from the side, for example, so that you're not on camera when you're doing it. You know how many people got arrested in the 80s and 90s just because they didn't know there were cameras in the ATMs?
Oh, I know. That's once again just not knowing the rules. If you're gonna do something, know the rules. You know,
exactly.
There's nothing wrong with. Well, I'm not gonna say nothing wrong with robbing people ATMs, but there's nothing wrong with like doing coupons and stuff.
Can I quote you?
As long as you are, as long as you're following the rules. You know, the rules are in theory meant to be bent. Don't quote me on that one either. That's not financial advice.
All right. So next class is going to be
ducks
home
that
invasion.
I can bend the rules and. Oh God.
Yeah. When Jay gets audited, finally, he's going to pull up this class.
Yeah. That's so funny.
Yeah. Look at NVOS though. That's good stuff.
I'm going to go ahead and end the recording part of this stream.
Yeah, it's a good idea for legal reasons.
For all y'all watching, I mean, I doubt there's anyone who watched for 51 minutes and 2 seconds after the fact at this point. But if you did, we really do appreciate you. And we will see you next time, 5 p.m.
They missed
Eastern.
all the good stuff.
Yes, true. Yeah. No, I can't blame anyone. We put out so much content per week. It's like impossible to keep up with all of it unless you're doing it live. But that's why we have that library, those channels of, in case anyone does want to, or, wants to pick which class is good for them. But our next class coming up is 5 p.m. Eastern with BTC Jerry going over how to avoid your taxes. No, I'm just playing. We're going to be going over charting, week 1 of our charting masterclass. So
that's just pesky IRA agents. IRS, geez, wow.
IRS.
Oh boy.
Internal Revenue Auditors.
That's the Northern Ireland. Yeah,
of course it is.
Pretty controversial.
We hope that y'all make some bread, and we're gonna stop this recording now.
Oh yeah.
Oh yeah.